Corporate Finance Excel Practice Problem. In this presentation, we're going to work a practice problem in Excel related to comparing financing options. Get ready, it's time to take your chance with Corporate Finance. Here we are in Excel. We have our information on the left-hand side. We're going to put that into the blue area into our worksheet on the right-hand side. We're going to be considering different financing options. As we do so, we're going to be breaking out our assets into these new kind of categories we may not be as familiar with, and that's intended to help us with our financing options, breaking out our financing options between short-term plans, long-term plans, more aggressive plans, less aggressive plans. Now remember, as we go through this, we want to consider just the accounting equations. When we consider the accounting equation of assets equal liabilities plus equity, we're thinking about the assets that we're going to have and how we're going to be financing those assets either with liabilities or with equity. We're focusing in on financing them with the liabilities here, some type of debt that we will be using to finance the assets. The assets, of course, need to be financed because we need the assets in order to help generate revenue. So we're going to be breaking out between temporary and permanent assets. We have the temporary and permanent assets and then the fixed assets. The reason we might break this out when considering the financing options is because remember that permanent current assets sounds kind of funny because the fact that they're in current assets means they're kind of temporary, but those are the assets we expect to be rolling over constantly and therefore continually being replaced, so they're kind of permanent. They'll be at a fixed level as opposed to the temporary current assets where we have some type of current assets that are going to be temporary in nature. We expect the actual balance to be going down at some point, possibly due to a spike in activity in sales, which would increase the accounts receivable and inventory for a temporary time period. Then we're going to have the tax rate 35%. We have the less aggressive financing plan, or what could be the more conservative or less aggressive plan, asset financed with long-term sources. We're going to say we're just going to take the whole assets and say we're going to be taking 65% of them, financing it with more long-term sources. So we're looking at our mix, and we're basically just going to take a percentage of total assets here at the 65%. Then the more aggressive financing plan is we're going to take the assets financed with long-term financing only 60%, and therefore finance on a short-term plan the rest of it. So we're going to have more of it financed on short term. So this is going to be a bit more of an aggressive plan. So why would we want a different set of financing plans? Note that the short-term financing plans are typically going to be more risky because we're going to have the loan for a shorter period of time. Number one, if we need the money beyond that point, we may need to look for another loan option, and they might have, if we have a flexible rate on the short-term plans, that could add more risk as well. If we take a longer-term loan, that's going to be more conservative, but typically the longer-term loan could result in a larger rate, especially if we're going to try to lock down the interest rate. Now, we might be using these factors up top to help us to consider the percentage, the 65% or the 60%, by saying something like, well, you know, the short-term financing needs are going to be the temporary needs here, right? So if I took a look at the total here, if this the total assets, the sum of the total assets, and make that blue, we're going to say we could take a look at the percentages and say that we have the 500,000 in the temporary divided by the total 1560000, and that's 32% on the temporary side. So that might help us to kind of break out these percentages that we're basically going to break out on the total assets over here. So that's why we could use this temporary and permanent breakout for help there. And then we're going to have the interest rate on the long term, 15, interest rate on the short term, 10%. We're going to have the earnings before taxes at the 380,000. We're going to calculate the less aggressive financing plan, the more aggressive financing plan, and then the income statement for the two, comparing and contrasting them. So let's start off with the less aggressive plan. We're going to have the interest on long-term financing, colon, and then I'm going to be picking up the total assets, which we just calculated because we're going to take a percentage of the total assets. So I'm just going to sum all three of these up. I'm going to say this equals the sum of the temporary, the permanent, and the fixed, and that's going to give us, once again, our total of the 1520. We're going to say that the percent, let's say the percent financed with long-term financing we said is going to be equal to the 65%. 65% long-term financing. Let's make that a percent. Home tab numbers group, percentifying it. Let's underline it. Home tab font group and underline it. And that's going to give us the amount financed with long-term financing. And that's going to be equal to the 1,520,000 times the 65% for 988. And then we're going to say the interest rate. So that's what we're going to finance at. Now let's apply the rate. The interest rate for long-term financing we said was the 15%. The 15%. Let's percentify that one. Go into the Home tab numbers group and percentify it. Underline it. Home tab font group and underline it. And that will then give us to our interest on short-term financing. Oh, interest on, not short-term. This is the long-term financing. Total, I'm going to put the total in the outer column, and then I'm going to sum up the long-term and short-term at the end, at the bottom line of this thing. So here's the 988 times the 15. Notice making these kind of tables is really useful, handy skill to have. So I would practice doing that. We're going to go to the Home tab, alignment. We're going to increase the indenting. Do that here again. Home tab, alignment, increase the indenting. Okay, let's do it again with the interest on short-term financing then. What about the short-term financing? I'll do the same calculation. We'll say the total assets. Should probably have an S here. That would be more proper. More propery. And then we're going to say this is going to be equal to, we could just say the same number up top. And this is going to be then, if this is 65%, we're going to have to do the rest. We're going to assume the whole thing is financed here. We're going to do the rest. So 100% minus the 65. So this is going to be, I'll say 1 minus 1 or 100% minus the 65. And then percentify that number. Home tab, numbers, percentify, underline, Home tab, font group, underline. And that is going to be then the percent financed with short-term financing. And then we're going to have then the amount financed with short-term financing, which is going to be equal to this number times the 35%. So that's going to be that. And obviously if we were to add this and this up, that's going to be our total. So we're financing all the assets here with our financing plan. Then we have the interest rate that we're going to be having on the short-term financing, which we said was, what was it? I think 10%. 10%. That's what it was. And then we're going to go to the Home tab, font group, and percentify that. Home tab, font group, and underline that. The other one wasn't the font group, it was the numbers group. And then we're going to go to and say the total is going to be the interest on short-term financing. And I'll put this in the outer column. It's going to be equal to the 532,000 times the 10%. Let's put an underline here. Go into the Home tab, font group, underline. Let's do some formatting, selecting these cells. Go into the Home tab, alignment, increase in the indenting. Then this cell, Home tab, alignment, increase the indenting. Then we have the total interest. Outer column equals the sum of these two numbers here. And then we're going to get our total interest at the 201,400. All right. Now let's say, what if we use the more aggressive plan, financing more with the long-term financing than the short-term financing? So we'll do that and we'll say, all right. Then we'll have the interest on long-term financing, colon, and let's actually practice basically copying this whole thing down. So I'm going to copy everything from up top. I'll do it this way, equals. It's going to look exactly the same except for some different numbers. So I'm going to pick up this number or this name. I'm going to format that all the way down using the autofill function. So we're going to autofill handle, drag that down. Then I want to format paint the entire thing. So I'm going to select this entire thing up top. We're going to go to the Home tab, clipboard format painter. Because it's the exact same area, I could just click the upper left corner in the blue section and boom, we got the whole thing formatted. Now we can just plug in the numbers. Note some of these numbers will remain the same as well, including the total assets. Total assets are the same, but now we're going to be applying the percent to be financed at 60 rather than 65. This is the new number, 60% rather than the 65%. Notice how it's already formatted for us with the percentages and whatnot because we format painted the entire thing for us. Then we'll multiply this out. This is going to be the 1520 times the 65%. There's the 912. The interest rate is going to be equal to the 15% over here. Then we'll multiply this out, bringing it out into the outer column, this being the 912 times the 15%. Then we'll do the same for the short term. So the short term, where we will once again pick up the total assets, same number. Now I'm going to say the rate is going to be equal to 1 or 100% minus the 60%. And that means we need another 40% on the short-term financing. Multiplying that out, we got the assets times the 40%. We get the 608. Then we'll apply the short-term rate, which is going to be equal to the 10%. Then we'll multiply this out. This equals the 608 times the 10%. There we have it. Let's go ahead and add this up in the outer column equals the sum of the outer column numbers. That would result in less, of course, because we financed more with the more aggressive short-term financing in this case. So then let's go on down and make an income statement starting at basically net income before interest and taxes, the earnings before interest and taxes. So we're going to start off with earnings before interest and taxes. That's going to be equal to what's given over here, the 380,000. It's going to be the same for the both plans. So I'm just going to say equals that same number. Then we'll pick up the interest expense. Interest expense is going to be equal to what we calculated up top for the first plan. That's going to be the 2014. And for the second plan, it's going to be equal to the 197.6. Let's put an underline on these two, selecting them, go into the Home tab, Font Group. Let's underline those ones. And this is going to be the earnings before taxes, which is going to be equal to the 380,000 minus the 2014. Let's copy that, Control-C, go to the right, Control-V, pasting that on over, double-click it, make sure it does what we want. Subtracting those two out looks good. Then we'll pick up the taxes. The tax rate, let's say this is going to be equal to the earnings before taxes times the rate. The rate up top we said was 35%. 35%. There we have that. Now if I double click on that 35%, I want that to say the same if I was to copy this over. Therefore I'm going to make it an absolute reference, selecting F4, putting a $sign before the B and the 5. Then I can copy this over by saying Control-C, right arrow, Control-V, double click on this item, the one above it, times the 35%. That's what we want, so that looks good. That's what we want. What we want if it looks good. So earnings after taxes. And this is then going to be equal to the earnings before taxes minus the taxes. Let's copy that, Control-C and paste. And so there we have our earnings after taxes. Let's go up top, Home tab, Font Group, and underline. Obviously, the more aggressive plan looks better if everything works out the way we hope that it should work out because we have the lower interest rate. Now, just for example purposes, let's do this whole thing again, but now let's consider there's a flip-flop between the rates. The interest on the short-term rate is actually going to be the interest on the long-term rate is actually going to be lower than the interest on the short-term rate. So we're going to say the long-term, if we take out the loan then for a longer period of time, then we can actually lock down a lower rate. And if we only need the loan for a shorter period of time, then we have the higher rate. Now this is possible to happen, you know, because if you lock down the loan for a longer period, especially if you guarantee the loan that you're going to have out, then you might have a lesser rate for the longer loan because the interest, the bank is depending on getting money for a longer period of time, and the money that you only need for a shorter period of time, there could possibly be a shorter, short-term rate that you have. So probably, more of an unusual type of situation, but could happen. And let's go ahead and then think about this and work on just basically formatting our worksheets. I'm going to do this a bit faster because the only thing that's going to change are going to be these two numbers. Let's see if we could format just basically the same worksheet and then work this out. Also note that if you do your worksheets properly and you were doing like projections, then you can simply, of course, change these two numbers and this whole worksheet would change along with it. So then you can basically copy the sheet over and then change these two numbers and start to manipulate and make tests of what would happen depending on different interest rates. But we're going to practice just constructing this thing again because it's good practice to do so. So we're going to go back up top. I'm going to use the formatting. So once again, you could copy the entire thing over, but notice if you copy it over, anything that has a formula in it over here could get lost. So what I like to do is use a formula to pick up the words. So I'm going to say this equals the text over here. We're going to have the same thing. I'm going to autofill that down. So I'm going to put my cursor on this item, use the autofill handle, drag it on down, and then I'll format paint the entire thing to get that nice formatting that we want without having to do it as we go. So I'm going to select the entire thing, including the cells that we have not included, the numbers so far. Go to the Home tab, Clipboard, Format Paint, and then we just need to click the top cell. We don't have to highlight the whole thing. We could do the whole thing, or we could just select that top cell and it'll pick up the whole thing because it's the same range. Then I'm going to say the total assets, once again, are going to be the same here. We're going to be picking up the same mix, which is going to be the 65%. I like to multiply it across. Note, you could say equals that number over here, but I would rather do the formulas in the worksheet I'm working with. So I'm going to double check the formulas by taking this number times the 65%. Then I'm going to pick up the rate, which is the same, which is now this is the thing that changed. So now the rate over here is the 10%. They flip-flopped. The flop has flipped and the flopped, and that's going to be the 10%. This is going to be equal to the 988 times the 10%. So there we're at the 98,800. Then on the long-term side, I'm going to take the assets here are going to be the same. Then the financing amount now is going to be the same, the 35%. Then we can multiply that out. This equals the 1,520,000 times the 35%. That's the amount to be financed. This is what has changed the rate, which is now 15%. This is the 15% because the flip has flopped. The flip, flop, and flipping. So this is going to be equal to the 532 times the 15. And then if we add up the outer column equals the sum of these items, there we have the 178.6. And let's do the same down here with our more aggressive one where we're going to say, all right, this is going to be equal to the same names over here. I'm going to copy and paste them this time. Control C, down arrow, holding down Shift, down, 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 down. Control V. Then I'm going to use the Format Painter, selecting the entire blue box. And then go up top to the Home tab, Clipboard, Format Painter, back to the right. And I'm just going to click that top blue box right there that should format the entire thing for us. Then we'll pick up the total assets, this being equal to the 1,520,000. The percent being the 60%. I'll multiply this out. This is equal to the 1,520,000 times the 60%. Then we'll pick up the rate, which has now changed. The rate now being the 10%. So 10%. Let's multiply this out in the outer column. This is going to be the 912 times the 10%. Same thing on down below. The total assets are going to be the 1,520,000. The percent is still going to be the 40%. Multiplying this out, this equals the 1,520,000 times the 40%. The rate now is the thing that has changed. It's now going to be the 15% because the flip has flopped. And we're going to say that this is going to be equal to the 608 times the 15%. And then we'll add up the outer column. Hold on a second here. We'll add up the outer column. Yep, we're going to say this equals the sum of the outer column. Looks funny because we came up to the 91.2, but that's just a format of the numbers here, so that's correct, I believe. And then we're going to go down, and we're going to say that now we can make our income statement, same kind of thing. We're going to say this is going to be equal to the earnings before interest and taxes, same starting point number here. I'm going to say this equals that one, and then we've got the Interest expense, this is the thing that's going to change. This is why we did the worksheets. Equals on the less aggressive plan, what we came up to on the less aggressive plan, 178.6. More aggressive plan equals to 182.4. Let's underline these two, selecting them, going to the Home tab font group and underlining them. Then we're going to go to the earnings before taxes. Subtracting these two out, this equals the 380 minus the 178.6. I'm going to copy it, Control C, right arrow, Control V. Then we'll pick up the taxes. This equals the taxes then. Taxes is going to be equal to this number times, I'm going to scroll all the way to the left and pick up that tax rate in our data. We probably should be picking it up in this data. It's going to be the same, but it would be better to pick it up in this data. I'm going to make it an absolute reference to, so I'm going to then select F4, putting a dollar sign between the I, or before the I, and between the I and the 5. And then I'm going to copy that and paste it over into the second cell, double click on it, double checking it, taking the number above it times the 35% looks good. Let's go ahead and underline these two by going to the Home tab font group and underline. That's going to give us our earnings after taxes, which is what we've been looking for this whole time. This is exciting. The 2014 minus the 70,004. Let's copy that. Control C, right arrow, Control V, and there we have that. And of course, we've got a flip-flop taking place basically because we flip-flopped the rates. So once again, you can do different scenarios, and if you have your information set up on the right-hand side, you can start to consider these scenarios both. And if you break out your assets between those that are permanent and fixed, you might be able to then think about these percentage needs a little bit more clearly, and then start using different projections to pick up your ratios. And you can do that by basically adjusting these numbers under different scenarios that you would brainstorm about. And that should change your entire worksheet if you're setting your worksheets up properly.